Let's be real. Most small business owners think insurance is just a checkbox. That is, you get it once, you forget about it until something goes wrong. Here's a startling fact. In the 2023 to 2024 period, 13% of all general insurance complaints were as a result of claim denials. That is, where people lodged a claim for their insurance and then were denied. That's 3,762 according to AFCA, the Australian Financial Complaints Authority. And here's the kicker. Most of those came from avoidable errors. That's from things like outdated or incorrect information, missing exclusions, or just outright having the wrong policy. If we haven't met yet, my name's Marel. I'm a former business consultant turned insurance broker. My goal on this channel is to help small businesses grow smart, stay protected, and avoid costly errors. Today, I'm breaking down the top 5 insurance mistakes that small businesses make and how you can avoid them. All right, mistake number 1 is the set and forget policy. This is hands down the most common. Most business owners take out a policy, they renew it every year, but they never review it again. But all businesses evolve. And every year, there's guaranteed to be something different. That could be anywhere from having new equipment, new staff, different revenue amounts, whether it's less or more. You might have changed locations. You might now own property instead of leasing property. It's very, very important to look at the detail. If your insurance hasn't kept up, you might not be protected anymore. To avoid this, make sure you review your policy every single year, especially just before it renews. Make sure to be in contact with your broker and declare all changes. And if this is a policy that you own yourself direct with the insurer, make sure that you look at the details there and have a look at the declarations to make sure that they align and accurately reflect what your business currently looks like. Mistake number 2, this is underinsurance. Underinsuring could actually cost you way more in the event that you need to make a claim. Underinsurance happens in events like insuring your gear, stock, property for less than it's worth. Your turnover is underestimated, or you're adding new stock or equipment and you forget to update that in your policy. An example here is the coverage you've got is $50,000, but in the event of a claim, the total loss is $100,000. The insurer might only pay half or less. This is dependent on the policy and the wording of your specific policy. Avoid this by getting proper valuations on your fit out, stock, tech, making sure that you are reviewing the total sum insured every single year, and also updating your figures after periods of significant growth, renovations, or big purchases. Mistake number 3 is assuming that liability covers everything. A lot of small businesses get this particular one wrong. And the reason is that they assume that liability is a one-size-fits-all policy covering everything. But here's the breakdown. Liability or public liability covers you in the event of physical damage or injury. Imagine a customer coming into your store and slipping. Now, there are nuances there depending on the type of liability cover that you've got and your business, that is the type of business that you operate in. But for the most part, it is that physical damage. Professional indemnity is a policy that covers financial loss as a result of professional advice or services. Think about a consultant giving incorrect or bad advice. And cyber insurance is another policy that covers many aspects like a data breach or if you are compromised. And commercial property insurance is an insurance that covers, for example, property damage. Now, I break these down with some different examples because it's common for someone to think that having that liability policy is all they need because it covers all aspects of business. But in actual fact, like I said, it's very specific. It's important to read the business description, and there are different insurances out there to cover different risks. And also make sure to match your cover to your risk profile appropriately. Mistake number 4 is relying on landlord, commercial property, or home insurance. Just because you operate in a leased space does not necessarily mean that you are covered. Here's the truth. Landlord insurance or commercial property insurance covers the building itself, not your stuff. In the event of fire, theft, or damage, your gear, your stock, your lost income, it's probably not covered. Even worse, the worst case scenario here is that your insurer could even deny your claim. Avoid this by making sure that you are always declaring the business use of any space that you have, and also making sure that you've got separate policies to cover your business with respect to income and the assets that business holds as well. Mistake number 5, ignoring the exclusions and the fine print. This one here is the one that gets many people when it comes to actually making a claim. Here's some examples of what exclusions can look like. You make a claim for a cyber event, but it's not included in your policy. Or you make a claim as a result of a flood, but there are flood exclusions. You might operate in a specific business industry or have business activities that are either not included or secretly excluded from your policy. Or you might have a policy that has limited cover for geographical locations, that is, whether it's fixed or moving locations for your services. Or your business might operate in specific business hours, but that's excluded from the policy. And the kicker here is that most people don't know until it's too late, until it comes time to actually make a claim and it gets denied. To avoid this, ask direct questions like, what's not covered? Read the PDS, which is the product disclosure statement, read the policy summary, read the fine print. When you're taking out an insurance policy, the whole point is that it's meant to cover you in the event that something happens and you're out of pocket, you've got a loss. And also get your broker, your insurance broker, to cover specific scenarios. Am I covered if X, Y, Z happens? Am I not? Why not? You need to understand. So let's wrap this up. Let's cover these top 5 mistakes. Number 1, set and forget policies that don't evolve with your business. Number 2, under-insuring assets to save money upfront. Number 3, assuming liability covers everything. It doesn't. Number 4, relying on landlord, commercial property, or home insurance to cover yourself when it doesn't protect business. And number 5, skipping the fine print and missing key exclusions. Remember, insurance is your safety net. It's your protection, but it only works if it's the right fit. I hope this helps everybody, and subscribe for more tips for growing businesses and ensuring that you remain protected. Thank you.